Imagine a world where banks are obsolete, where money is entirely digital, and transactions happen without middlemen. That world is closer than you think, and it all started with Bitcoin. But what exactly is Bitcoin, and why does it matter? In this video, we'll break it all down. The origins of Bitcoin and its mysterious creator, how Bitcoin works and what makes it valuable, and what the future might hold for this groundbreaking technology. Whether you're new to crypto or a seasoned investor, by the end of this video, you'll have a deeper understanding of why Bitcoin is often called digital gold, and why it could be the most important financial innovation of the 21st century. The origins of Bitcoin. To understand Bitcoin's importance, we need to go back to its mysterious origins. In 2008, amidst one of the worst financial crises in history, an anonymous figure, or possibly a group, going by the name Satoshi Nakamoto, published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This document proposed a decentralized currency that allowed people to send money directly to one another without banks, avoiding the problems of inflation, corruption, and financial collapse that had plagued traditional banking systems. The timing was no coincidence. The 2008 financial crisis, triggered by reckless banking practices and excessive risk-taking, led to massive bailouts and economic instability. Trust in financial institutions was at an all-time low. Nakamoto's Bitcoin offered an alternative, a system where no central authority could manipulate the money supply or control transactions. Bitcoin officially launched in January 2009 with the mining of the Genesis block, the first block of the Bitcoin blockchain. In this block, Nakamoto included a now famous message: "The Times, Euro 3 Jan 2009 Chancellor on brink of second bailout for banks." This was a direct reference to government bailouts and a statement about why Bitcoin was necessary. Soon after, Bitcoin's first real-world transaction took place. On May 22, 2010, a programmer named Laszlo Hanyecz paid 10,000 BTC for 2 pizzas, an event now celebrated as Bitcoin Pizza Day. At the time, those 10,000 Bitcoins were worth about $40. Today, they'd be worth hundreds of millions of dollars, highlighting Bitcoin's exponential rise in value. How Bitcoin works. Bitcoin operates on a groundbreaking technology called blockchain. Think of blockchain as a decentralized digital ledger, a system that records every Bitcoin transaction in a transparent and immutable way. Unlike traditional banking ledgers controlled by financial institutions, Bitcoin's ledger is distributed across thousands of computers worldwide, ensuring no single entity can manipulate it. So, how do Bitcoin transactions work? When a person sends Bitcoin, the transaction is broadcast to a network of computers, nodes, for verification. These nodes check if the sender has enough Bitcoin and confirm the transaction's legitimacy. Once verified, the transaction is grouped into a block and added to the blockchain. This process is secured through cryptography, making it nearly impossible to alter past transactions. A key component of Bitcoin security is proof of work, POW. Bitcoin miners, powerful computers, compete to solve complex mathematical problems to validate and secure transactions. This process is called mining, and the first miner to solve the problem gets rewarded with newly minted Bitcoin. This not only incentivizes participation, but also ensures the integrity of the network. One of Bitcoin's most defining features is its limited supply. Unlike traditional currencies that can be printed endlessly by central banks, Bitcoin has a hard cap of 21 million coins. This scarcity is built into the system, making Bitcoin resistant to inflation. As of now, over 19 million Bitcoin have already been mined, and the last Bitcoin is expected to be mined around the year 2140. Bitcoin's scarcity and decentralized nature have led many to call it digital gold. It's not just a currency, it's an asset that people use to store value, especially in times of economic uncertainty. Unlike gold, Bitcoin is easily transferable, highly secure, and immune to government interference, making it a revolutionary financial tool for the modern world. Why Bitcoin is valuable? Bitcoin's value goes beyond being just a digital currency. It is often referred to as digital gold. Unlike traditional money, which can be printed in unlimited amounts by central banks, Bitcoin has a hard cap of 21 million coins. This scarcity creates a store of value similar to gold, making it an attractive asset for investors looking to protect their wealth from inflation and economic instability. One of Bitcoin's greatest strengths is its decentralization and trustlessness. Unlike traditional banking systems, which require intermediaries like banks and payment processors, Bitcoin operates on a peer-to-peer network. This means no central authority controls it, reducing risks of manipulation, fraud, or government interference. People can send and receive money globally without the need for approval from a financial institution. Another key factor is security and immutability. Transactions on the Bitcoin blockchain are irreversible and cannot be altered once confirmed. This makes Bitcoin highly resistant to fraud and counterfeiting. Unlike traditional banking systems, which are vulnerable to hacks and data breaches, Bitcoin's cryptographic design ensures that transactions remain secure. Finally, Bitcoin serves as an inflation hedge in a world where fiat currencies lose value over time due to excessive money printing. Governments can devalue their national currencies, but Bitcoin remains untouched by political and economic policies. Many investors see Bitcoin as a safe haven during times of economic uncertainty, similar to how gold has been used for centuries. The rise of Bitcoin, adoption and growth. Over the past decade, Bitcoin has evolved from an obscure internet experiment to a globally recognized financial asset. Major companies like Tesla, MicroStrategy, and Square have invested billions of dollars into Bitcoin, adding it to their corporate balance sheets. Financial giants such as BlackRock and Fidelity have introduced Bitcoin investment products, allowing institutional investors to gain exposure to cryptocurrency. Some countries have taken Bitcoin adoption a step further. In 2021, El Salvador became the first country to recognize Bitcoin as legal tender, allowing citizens to use it for everyday transactions alongside the US dollar. While this move was controversial, it marked a significant milestone in Bitcoin's journey toward mainstream adoption. Another major development has been the rise of Bitcoin ETFs, exchange-traded funds, which allow investors to gain exposure to Bitcoin without directly holding it. These investment products have made it easier for traditional investors to enter the crypto market, further legitimizing Bitcoin as an asset class. Beyond investment, Bitcoin is also playing a crucial role in financial independence and helping unbanked populations. In countries with unstable economies, high inflation, and restrictive banking systems, Bitcoin offers a way for people to store and transfer wealth without relying on traditional financial institutions. Whether it's sending remittances across borders or protecting savings from currency devaluation, Bitcoin has become a lifeline for millions of people worldwide. Bitcoin controversies and challenges. Despite its success, Bitcoin is not without controversy. One of its biggest criticisms is its volatility. Bitcoin's price can swing dramatically within days, making it a risky investment. While some see this volatility as an opportunity for high returns, others view it as a major drawback, limiting its use as a stable currency for everyday transactions. Another major concern is Bitcoin's energy consumption. Bitcoin mining requires massive amounts of computational power, leading to high electricity usage. Critics argue that Bitcoin's carbon footprint is unsustainable, with mining operations consuming more energy than some small countries. However, supporters claim that renewable energy solutions and more efficient mining practices can address these concerns. Government regulations and potential bans pose another challenge. While some countries have embraced Bitcoin, others, such as China, have cracked down on its use in mining activities. Regulatory uncertainty remains one of the biggest hurdles for Bitcoin's long-term adoption, as governments try to determine how to tax, regulate, or even restrict its usage. Lastly, scalability issues continue to be a topic of debate. Bitcoin's network can only process a limited number of transactions per second, leading to congestion and high fees during peak times. While solutions like the Lightning Network aim to address these issues, Bitcoin's ability to handle mass adoption remains a key challenge. The future of Bitcoin. As Bitcoin continues to evolve, several developments could shape its future. One of the most promising solutions is the Lightning Network, a second-layer scaling solution designed to make Bitcoin transactions faster and cheaper. By processing transactions off-chain before settling them on the main blockchain, the Lightning Network could make Bitcoin more practical for everyday use. But will Bitcoin replace fiat currency? Some believe Bitcoin could eventually serve as a global reserve currency, similar to the US dollar today. However, its price volatility and slow transaction speed make it unlikely to replace traditional money anytime soon. Instead, Bitcoin may continue to function as a digital store of value rather than a medium of exchange. Financial experts remain divided on Bitcoin's long-term potential. Some predict that Bitcoin's price could skyrocket as demand increases and supply remains limited. Others warn that government regulations, technological advancements, or competition from other cryptocurrencies could challenge Bitcoin's dominance. One potential risk is quantum computing. If quantum computers become powerful enough, they could theoretically break Bitcoin's cryptographic security, threatening the integrity of the network. However, researchers are already exploring quantum-resistant cryptography to counteract this possibility. If you found this video helpful, don't forget to smash that like button, subscribe for more in-depth finance content, and check out the links below for more resources. Stay tuned for more videos where we break down the biggest cryptocurrencies and finance trends. Make sure to check the description for my Binance referral code, and don't forget to use it when signing up.